What's good? What's good, my people? How is everyone doing? Hey. How we doing? Hey.
Anything you want, then you can get it.
Hey.
Don't be scared, cause then you'll regret it.
Hey.
You no longer gotta look pathetic.
Hey.
Gizzy,
What's good?
Anything you want, then you can
What's good, Facebook?
Don't
What's on Facebook Live right now?
then you'll regret it.
Oh.
No longer gotta look pathetic.
Getting ready.
GizzyCredit. Anything you want, then you can get it. Don't be scared, cause then you'll regret it. You no longer gotta look pathetic.
Let me know.
Gizzy.
Yes, sir.
GizzyCredit. Anything you want, then you can get it. Don't be scared, cause then you'll regret it. You no longer gotta look pathetic. GizzyCredit.
Hey, what's up, Joe? Joe Resto. He just started credit repair with us.
Don't be scared.
Bendiciones to you. Congratulations.
What you need is just a change of
What's good with my YouTube people? Got one person on YouTube. What's good, Mark? Chillin', bro.
Just get it fast. GizzyCredit.
Gotta let my cat in. Anyways, my people, I hope all is well. This is GizzyCredit podcast, GizzyCredit team podcast. Hope all is well. Hope you are staying safe with the Rona. Hope you're staying safe with the riots. Whole bunch of stuff going on. A lot of it we talk about with the economics and finance of it, so you guys can stay alert on what to watch out for, if it's the right time to buy a house or not. Anyways, let me get my partner John on the line. We're going to do this real quick. All right. Yo. Next week we'll have a better sound, but for now on we already have this sound that you guys hear. Which let me know, please, if you guys hear John. John, say what's up. What's up? I have questions for you, Gizzy. Mark, today is the day to ask questions because this podcast, we're going to first talk about economic and finance of what's going on right now in this past week. And we're going to answer all your credit-related questions as well. Okay? Okay, back to you. You have music for your name? Yes, I do have music for the name, Joe Resto. Anyways, what's going on, John? For those of you who don't know, John he's from Philadelphia. John lives in two places, Florida and Philly. And for the summer, he comes to Philly because I'm sure it's hot as hell in Florida. So he comes up here. And he came up here last weekend and he left this Friday. So he saw the riots, which is so unfortunate in Philly, what's going on over there. And the next thing you know, he has to go back because he got kids, family. You don't want to bring that stuff. So how was that this weekend, John?
Well, I gotta be honest. It's on the way back we stopped in Savannah. So we left Friday.
Okay.
We stopped in Savannah and stayed overnight. By the way, Savannah's beautiful. Been there before. It's gorgeous, but. We got to Savannah. It was like January, February.
Cold.
There's no masks anywhere. Everything was open. Literally, it's like night and day. Being up in the Northeast for 2 weeks, which we were, you get a real good understanding of what's going on up in that quadrant of the country. And I can't speak for the West or the Midwest, but I know the South is a completely different perspective. Literally, it was coming to Savannah was like, honestly, there was people like we go to the historic part right, the the center of Savannah, the historic area, and this thing called City Walk. I mean,
Yeah.
outdoor music, sitting out, no masks anywhere. People
Oh,
out
wow.
just ripping, right? And I'm like, this is insane. And I was only up in Philly for 2 weeks, right? But that wears on you, the energy up there, and just it's just a very thick layer of just like anxiety and stress.
Oh, in the East Coast, right? Us right now? Yeah, it's
up there, up north. It's just layer of just intense stress, man. I mean, you leave that area and you just feel the energy leaving. You know what I mean? Like, it's crazy. But I mean, getting down to Florida, it's the same way down here as it was in by the time I got down here. Now, when I left here, I told you it was at like 80% capacity. Now it's,
yes.
I mean, very few people are wearing masks. I mean, it's the masks are almost completely gone. I mean, there was almost nobody in Savannah wearing masks. So, I mean, I'm happy to be back. I mean, for a multitude of reasons. I think up there is going to have a lot of problems. I really do. I mean, I wouldn't be surprised once people start getting out, once they start reopening in the cities up there, whether it be DC or New York or Philly or, I mean, there's got to be some serious mental health issues going on up there, right? Like people like mentally being like exhausted. I mean, we got friends up there,
yeah.
In the business community that I, obviously I've made in the years leading up to it now, and they're just exhausted, right? I mean, they can't get out because literally nothing in Philly is open. Literally, I mean, nothing. But after the riot, I mean, there wasn't anything open before, but they boarded up everything after that. So
I don't know if any of you have been to Philadelphia. I've been to Philly. I live in Bergen County, New Jersey. So my friends, they like to go to 76ers games and go eat steak sandwiches from down there. Cheesesteak. So, but if you go to Philadelphia is like a New York City. Everything is crammed. All the houses are crammed together. It's city. It's crazy.
Yeah, after that happened, after last weekend, everybody boarded up. So literally up and down the blocks, it boarded up. Nothing was open. I mean, it was like a ghost town. It's crazy. It was crazy. So, I mean, by the time we got out of there, I was like, man, I just don't, for people that have been dealing with this since February, right? In the winter when it started in March and stuff, and they're stuck in the places all that time with nothing open. I just can't understand. There's got to be a mental health issue that's developing, right? Just people just losing, just really on a wire, man, because I just can't even imagine.
I was just out the other day. I mean, I start going out in the morning for walks with my daughter, and I see this guy running, sweating, with a mask on. I said, bro, I stopped him. I said, bro, you're doing your lungs damage. You got to take your. No one is by him. It was only me and him in the street. Like, he was on the other side across the street, and I'm like, bro, you got to take that off. He's like, for real? I was like, bro, you only have to wear that. You're like 6 feet from people. You don't got to wear that when you're running. You're gonna mess up your lungs.
Yeah, I mean, they're not even talking about that, right? They're just telling people up there, it's wear masks when you go to the bathroom in your house. I mean, it's ridiculous. I mean, it's crazy. I mean, it's like they don't even think about the fact that, like, the fibers from, these surgical masks, and the fibers from whatever, other stuff, when you're breathing, you're inhaling that, you're sucking them into your lungs, man. I mean, not to mention the carbon dioxide that you're re-inhaling when these masks are so close to your face, right? I mean, they don't talk about any of this. It's crazy. I mean, you don't hear any of this stuff. It's honestly, man, I couldn't even, for the people that have only been up north and haven't had the chance to get out of there during this period of time, right? If you guys came down to a different part, like, that's open and operating, it would be like a different world. I mean, you almost feel like you're going to a different country. It's crazy. But I mean, I'm grateful that we're down here just for a multitude of reasons.
Didn't you have any protesters down there?
I mean, I believe there was. I know Glenn told us, a client of ours, Glenn, said there was. I mean, it's not since we've been down here. And honestly, a lot of the rioting in Philly even stopped. I know, the weekend we left on Friday, Saturday, there was a huge protest. And same with DC, same with New York. So, I know I know, and it's growing. It's a growing movement, as it should be. And the lack of riding, I think, allows people to people are coming with their kids and stuff to support it, right? When you extract the violence.
Oh, yo, why would you bring your kids when you know it could pop off? Why would you do that?
That's what I'm saying. So, but that it's great that now that the violent element of it has kind of subsided, right?
Yes.
And the real mission is being pushed forward, right? And you can get people
this past weekend on Sunday, I think Los Angeles had 50,000 people. I mean, it was crazy scenery. You see people for blocks.
I saw. Yeah, I mean, well, DC had a ton, and they all did, and I think it's great. I mean, I hope it continues to go on. I think the crazy part with all this stuff going on, insane, is just the fact that the financial markets continue to just keep running up. I mean, it's crazy, as if the stock market's a different world. I mean, I know all the other variables that are causing it to go up and stuff like that. It's just crazy to see such a disconnect, right? I mean, when things were at their worst with the riots and stuff like that, it didn't even skip a beat, So I mean, there's obviously a pretty clear disconnect between what's going on Main Street, and the reality of what the economy looks like right now, and what's going on in the stock market. Now, keep in mind what I've always said from the past is just the stock market moves like a motorcycle, right? Just because it's going up right now, it's going to endlessly go up. It could turn on a dime, right? So that doesn't change anything we talked about before or in the past. It's just because unemployment, even though the unemployment number came out a little late, over on Friday, which caused a lot of the run up on Friday. We're still talking about an unemployment rate that's like 12, 13, 14%. So I mean, you're still running that up, right? And by the time things start to open up everywhere, we still haven't opened. New York just opened today, right?
Yes.
Philly is theoretically open in phase yellow, right? Which means you can open at 30% occupancy, which basically, I mean, I don't even understand, you're not going to be able to operate capacity, right? Same with New York. I mean, an article, a thing I saw today was saying just a lot of people in New York aren't even opening up.
Yeah.
They're waiting because they're just in just another state of just fear, right? So I don't know. That's a huge, congestion of our broader population, right, that exists up in that northeast quadrant of our country, right? So, I mean, on top of the unemployment rate that already exists, I just think that people should be cautious. But, I mean, it seems like a lot of our clients are trying to buy, so...
Well, right now, just not cut you off, and before we move forward, we have a famous customer, Antoine, and Antoine texted me, and he said, please continue. Don't worry. Don't worry about my girl. So,
because I had emailed him later, and I'm like, listen, you got to clarify. This doesn't make any sense,
John. But it doesn't make any sense because we got this customer, and let me tell you something. I'm scrolling through my text messages here. Last time we were in contact with him has been a while, but the last time he really wanted to get started was 2 years ago. So, like many of you. And even you, Joe, you're Joe Resto. He's been a Facebook friend. We know him for a very long time. And he called. He wanted to get started over the weekend, Sunday, which we take off Sundays. But if you want to start, ain't that right, John? We start. And John will take his time out, spend it with his family. He'll get people started. And then today, his girl called me, talking to me, John. Oh, I want to start credit repair, but I want to know if you could remove how long it's going to take to remove $290,000 worth of student loans that are on her credit report. And like I say all the time to everyone, I give you guys worst case scenario. I say it could take 30 days to remove everything from one bureau or 12 months or more. All right. But the bulk of the removals, you'll see great removals in about 3 to 4 months, which is 90 days to 120 days. She said, no, I don't know that even though that's going to impede me from qualifying for more, I got to take advantage of this. The interest rates are so low. I don't think they're ever going to be low again like this. I got to take advantage. But we're going to go for this house right now. We're going to go for this house. And I'm like, we advise the people not to buy just yet, even though interest rates are low. But right now, with the market the way it is, and let me tell you something, I don't know that much as John knows, but in real estate. But John will let you know how the market is right now. Is it a good time to buy or is it a good time to refinance?
I mean, we already talked about, and honestly, the idea behind, I heard that, I don't know if this is the thing going around mortgage brokers, but I mean, where's the idea that interest rates are going? I mean, we're not even over 1% yet on treasuries. I mean, where would interest rates go up, and where would they go up to? You know, I mean, I think they bottomed. If you remember, if you go back in and you know, these casts that we talked about in the beginning when the market was tanking early on in February and March, I said that, you know, that where the T-bill had gotten to, the 10-year had gotten to was so low that, you know, but there was only so low that mortgage rates were going to be able to go because there's a certain, you know, servicing fee that they pay to the originating bank, right? And that's normally like 75, 80 basis points. So when you start getting down around 2.9% rate to 3.1, that in effect with an inflationary adjustment only leaves the investor, who is Freddie or Fannie, talking about roughly 2%. That's just a tick above inflation, right? A normal inflation adjustment. So they can't go much lower than that, and they're not going to go much. And they didn't go lower than that. At the armpit of the market, it did exactly what I said it was. It didn't go much lower than that. Now, we're not out of the woods yet. I don't know why anybody thinks that this is like some kind of a, you know, just because the market's rallying, you know, broadly, it doesn't change anything. All the same variables are there. Not to mention, I don't think anybody understands when mortgage rates go up, it needs to be spawned by something, right? We've been in a low interest rate environment since 2008, right? I mean, and even at that time, before that market collapsed in 08 and 09. I mean, the floating rates at that time were like 6.5 on mortgages, 6.3, which is still very low. Historically, was very, very, very low. So, I mean, I don't know why anybody think that interest rates go up. Maybe if you're talking about going from 3.25 to 3, maybe go up 25 basis points, but that happens. You know, the mortgage rates, they fluctuate like any other active market. Yes. You could see them fluctuate from anywhere from 3% up to 3.5%. They move around. I mean, that's going to happen. But to think that they're going to go up anywhere exponentially is ridiculous. And there's nothing to substantiate. I mean, our entire economy is being held together by the Fed right now, right? So if there's so much money that got lent out for stimulus-related money. I mean, if they raise the interest rate, they're effectively raising the rate that they have to pay that money back, right? Yes. So why would they do that to themselves? It doesn't make any sense. It's illogical. It doesn't make, you know, and people, like I say all the time, we'll give you the right information, and you can choose to use it or you can ignore it and do whatever you want. But there's just some things that are just so blatantly inaccurate because people are just assuming, right? Or somebody told them that, maybe doesn't understand how this stuff gets arrived at to make sense out of it. But no, interest rates aren't going anywhere. And honestly, the other thing that I think needs to be clarified is just the fact that you know, the amount of the loans are kind of that's not really. I mean, I feel like a lot of people get caught up with that, right? When they come to us, yeah, I got a $700,000 mortgage. I need to get removed. Okay, well, the fact that it's $700,000 has no. It could be $700,000 or $70,000, right? It's the same process. Yes. There's no special notation on the account when it's reporting to the credit bureaus. Correct. You're not getting an extra fight on Chase's side. You know, as far as them trying to keep it on because it's a $700,000 mortgage versus a $70,000 mortgage. There's no special handling that they can even do, you know, in regards to trying to counter the dispute over and above what they're already doing. So the amount of them doesn't hold any weight or water, at least as far as we're concerned. I can't speak for other companies, but I know how these accounts attach. I also know how they come off. So I know there's no special area for them to reflect that this is a high-priced mortgage, right? I mean, I've removed mortgages. I've had clients in Greenwich where I've removed $12, $15 million mortgages. And they come off just like $120,000 houses or mortgages. It's not any different, you know, in that capacity. It's the same thing. So, I mean.
A lot of people don't know that, you know, you guys may be going through a financial situation right now. You may be looking for credit repair. And you may look at your situation and be like, I just got divorced. I just finished filing bankruptcy, or I got to get a job, or, you know, I'm homeless and I need to get an apartment. We have all types of situations. But John has had people who are multimillionaires from this, you know, from Wall Street, people who live in Connecticut, and the people who that $1 million homes, and they don't even know how to deal with their credit.
No. Listen, I've helped celebrities. I've had clients that we do together that were celebrities, right? That are. I've had CEOs of Fortune 500 companies. These are still clients of mine as well. Like, they just stay with after we help them. I had a billionaire in Connecticut I helped that I've helped in the past. I was about to use it. So the point he's trying to make is just that it's all financial literacy is a problem in most demographics, right? It doesn't matter.
Quick question, Jay. Why would a billionaire need credit repair?
Well, he owned like 50 dealerships in that area, in the whole Connecticut. He was an auto dealer, and he owned like 50 dealerships. So the way to get the warehouse lines, when you're going out and you're leveraging each one of these dealerships, you're effectively getting a floored line, right?
Okay.
Those floored lines basically allow you to buy on the line to put the cars on the lot, right? Does that make sense?
Yes. The cars on the lot, you finance them.
Well, effectively, what happens is it's the same way that a direct lender on the mortgage side basically funds the loans and then turns around and sells them. They do the same thing. They get a showroom line that brings in all the inventory, right?
Okay.
So that's what all that stuff they have sitting on there. And there's terms on that, 30, 60, 90 days when you got to pay it back, right? With a better situation, the higher you get, the more you get. Now, a guy that was spread out this wide and as large and as vast as he was, even in situations like that, he needed to have his credit as ideal as possible, right? Because he was leveraging heavy. See, the key with the thing that I don't know that everybody understands is that a lot of these people that are billionaires, they're not sitting with $1 billion in the bank, right? It's a net worth of $1 billion, which means their assets are worth X, their liabilities, which is their debt, are worth Y. You back it out and you land at $1 billion, right? Most of these guys aren't sitting on $1 billion in cash, right? They're constantly using the markets, whether it be the credit markets, equity markets, etc. In situations like an auto dealer, this is how they grow their business, right?
Yes.
And obviously the other dealerships have equity, right? All the other dealerships he had, which is a shitload, excuse my language, that he had, there was a ton of equity in him, but in order to be able to continue to grow and substantiate, he needed to keep his personal situation. And for some reason, he needed to utilize his personal credit in some of these situations. He also had a couple rental properties that he wanted to refinance, and they were on his personal credit for some reason. That I can't answer for you, but that was another reason why he needed to be able to do it. But I mean, I think that's where people get misled. I think people hear, people are billionaires and they naturally assume that they just have that in cash, and it's just not the case. I mean, there's a certain portion of it that's liquid, obviously, that they utilize, but there's also a large portion of it. It's all relative, though, right? I mean, if you think about it, in a lot of these cases, it's all relative. These guys might be worth $1 billion, but I mean, in all reality, they might have $1 billion worth of, debt offset by a couple $1 billion worth of assets, right?
Yes.
So, I mean, it's all relative. I mean, it's all relative if you scale it up and down among different demographics. So, yeah, but to answer the original point, we've helped all different kinds, and it's the same idea. That's why I just think that financial literacy, that's why I think the education side of this stuff is so important, because quite honestly, you see it at all walks, all levels of intelligence, all levels of education. It's just not taught anywhere. So if it's not taught anywhere, how are they going to learn it?
Yes.
They learn by trial and error, right?
Yes.
The problem is some people don't ever actually learn. They just keep doing the same things wrong over and over and over again because their perception is incorrect as to what is right. And then they go on the internet, and that incorrect perception gets reinforced, right?
Yeah.
So they just keep doing the same thing wrong over and over and over again because there's a credit board of 45 other people who are hiding behind an avatar that tell them it's right.
But I could just imagine the billionaire will make his income during the month and be like, why am I going to finance stuff? I could just buy that and pay for it ASAP. You know what I'm saying? But they still need.
Yeah, but that's not how you become a billionaire, man. And the reality is, look, I'm not a billionaire, so I'm not trying to act like I am. Not right now. The fact of the matter is that.
Yes.
But here's the thing, though. When you deal with guys on at that point, and it's all about leverage, right? There's a tremendous amount of leverage that exists.
Yes.
Just like Fortune 500 companies, just like everything. When you get up to that amount, you have to leverage. So they're constantly levering assets, right? Now, they might not be in danger zone leverage like 60, 70, 80%. They might be 30, 40, 50% leverage, right? Which helps to lend towards the net worth. But the fact of the matter, there's constant leverage. That's how you grow. There needs to be a certain amount of debt to take on in order to grow. If you just live in a cash position, ask a lot of the people in this country that just live strictly in a cash position how far that gets them, right?
Yeah, that's true.
They end up having to lever. The problem is they don't know how to properly lever. You understand what I mean?
Okay.
They lever at levels, and they continue to lever at levels that are unsustainable relative to their income. When you get up to a certain level of income, you get up to a certain level of assets, constantly tap into at sustainable amounts, you get into a situation where you can lever wisely, right? And you're getting interest rates that are a lot better, you're getting opportunities that are a lot better, and you're getting situations that are a lot more sustainable over and it would be unwise not to utilize it, right? Because it's allowing you to go buy other assets that are building your network. And, we got into some of that stuff last time where we got into, the 1031s and things like that.
Yes.
All creative things that you do in order to grow and expand the net worth, but it's almost entirely, I don't want to say entirely, but it's largely, asset driven, right? Because these assets are appreciating, right? So you may be buying them in the moment with the idea that you expect them to appreciate X, Y, and Z, like real estate, A lot of that, you're getting the tax deductions every year from it, but the idea is going to continue to appreciate, right? And you're getting all this rent coming in and all this cash flow coming in from the rentals, whether it's commercial or residential. You're getting all the tax write-offs in the meantime, and it continues to appreciate, and you can lever it while you're keeping it, right? And that's where the leverage comes in. Same with all the other areas of assets that you can grow with. So, I mean, I don't want to get too much in a tangent on that, but I mean, the focal point was, I think, just the fact that financial literacy or true understanding of credit and how it works and things like that is not specific to certain demographics, right? And I think that a wide swath of real, we try to cover like real stuff, give real good information for free, right? That people can utilize and capitalize on and actually, benefit themselves, right?
Yes.
It's not surprising to me that every mainstream, and I'm doing air quotes over here, financial literacy platform or site or everything, it's always limited, right? It's like either real basic or the information is terrible or it doesn't really ever get people to a position where they can actually utilize it or learn, or it's too expensive, right? So honestly, I don't even know any that are too expensive. I'm just assuming that there's got to be one out there that's too expensive, and that's why people don't use it. I won't ever, and I've talked about this before, I won't ever understand why it's frowned upon to give people the proper level of education as it pertains to this stuff. I really don't. I mean, if you're a lender, you'd have to assume just a hair more of financial literacy among people and just understanding leverage and how it can be applied properly would probably help the default rates, right? I mean, there's always going to be people that are going to over-lever, that aren't going to take it serious, that aren't, they're just going to keep running up debt, either file BK or charge them off, do whatever they got to do, start it back over. That's just a small portion of the population, right? A lot of people just don't understand, and they're trying, and they're going through this as trial and error. And if they just had the proper guidance, they would, it would be a completely different situation that they probably more than likely would try not to repeat, right? They would just capitalize on the information they learned and continue to grow from there.
I know. And, there's this whole thing of which has been going on for a long time is the miseducation from minorities not being educated as much as other cultures. You know what I'm saying? That has a lot to do with it too. Inner cities.
That's inner cities is general education. Forget about financial literacy, right? I mean, I can speak for Philadelphia, specifically, but I hear what you're saying, right? And I know that there's statistics that show that interest rates in the past, interest rates lent to,
John, this woman
higher.
was talking to me desperate. I need to get this outside. Like if these interest rates are going to go somewhere.
Who said this?
This
Antoine's
is
wife?
Antoine's wife, yeah.
That's what I'm saying. But that could have been some mortgage guy shoving that down her throat too, right? Like you gotta lock in now.
Well, it's a sell.
Yeah, it's always a sell, right? It's always a sell, and then they can play on the lack of it. That's what I'm saying, though. Just imagine, and I know, we're trying to get a lot of this information out as much as we can to educate as much as we can, and it's incremental at this kind of particular point in time, right? But I mean, if you can really get to the point where people can understand what they're saying, and the guy that's shoveling a bag of shit you can pick up on right away, I'm like, no. Right, because more than likely, if you recognize the fact some guy's trying to get over on you, just trying to force you, whether it's an agent or a broker, mortgage side, real estate side, you probably wouldn't do business with them if you really thought that they were trying to get over on you, right, or manipulate. You'd probably be like, I'll just go to somebody else.
Yes,
because they're a dime a dozen, right? I mean, in all fairness, they're a dime a dozen, and the one thing that should separate them, one from the other, not only their ability to perform, but the integrity that comes along with it, right? I mean, especially in situations like that where there's just so many. So, I hope and I aspire over the course of time, and I mean, to be able to be a part of some kind of larger financial literacy scenario where you can educate the masses on this kinds of stuff. Because I really think that, especially kids, where they're just starting out now, if you can kind of ingrain that in their brains at a young age, and they can learn properly how to do things and be comfortable with terminology and understand different aspects. Because honestly, it's if you're being taught the right way, it's not that hard to learn. Especially because most people are interested in the financial side of things, right?
Yes.
They want to learn. They want to know. That's why all these credit boards do so well, right?
Yes.
Because people want to know, right? They want the right information. It's always some scumbag on the other end, right?
Yes.
That's constantly trying to figure out a way to fleece $5 out of them, or is misleading them because they're trying to project their own stupidity onto somebody else, right?
Yes.
And it ends up just compounding the issue and making it worse. So, I do anticipate, just with the general evolution we're having as a society, right, and just the more enlightened we are becoming as a society, between, the Me Too movement and and hopefully the positives that'll come out of, a lot of these protests with George Floyd. I do think over the course of time there'll be something, right? I can't envision it entirely right now, but I do think there will eventually be something.
Well, how about the narrative that's going along right now, which means defund the police, in some of these big cities, like in Minnesota. So how would that work with, like, because don't you pay taxes for these police to come out and protect you? I mean, you were saying that the other day, how they weren't even around Philadelphia when the whole thing was happening.
Yeah, I mean, I have seen that. I have heard that. I don't understand that. I don't. Well, what is the alternative? You defund them, and then what? It gets worse. So I don't understand it. I don't think there's ever been. I don't think there's been a full plan formulated as to what the alternative to that is. So I think in the interim, it's a lot of frustration, understandably so.
Yes.
And a lot of pent-up frustration. So I mean, as Democrats, it's an opportunity for Democrats to pounce right now, and I think they're kind of pushing it far. I don't know what the alternative is, though. I mean, I defund the police and you start to back. Who is enforcing law? I don't really know by marginalizing them even further than they're already being marginalized right now. Right, wrong, or indifferent. I don't know. Is it the promotion? Because there is that element of society that doesn't mind, using taking that as an opportunity to commit crimes.
Oh,
right?
Hello. I mean, I was just they said something about. I was watching a YouTube video today about some in Toronto back in 1969. The police were on strike for 17 hours, and in those 17 hours, if you have your own credit repair company and I have my own credit repair company, right? I will go to your credit repair company and I will put your business on fire, and the cops wouldn't do anything because they were on strike. So
yeah, that was how they did it back in the day. Right?
Yeah,
so, I mean, everything was a storefront. And that's how you approach. So you went burn their stuff down. So I mean, but that's what I'm saying. Unfortunately, I don't know how that works itself out. I mean, I do know that, as far as, like, generally speaking, I want to try and tie this back to the financial side of things.
Yes.
But at the same, I do think a lot of positive, and the intention is absolutely just, and I think I'm hoping a lot of positive can come as a result of this, and there can be, and whether it be the police, adjustments need to be made, and all that stuff needs to be done in order to make everybody feel comfortable, right? And then we can grow from. That's what I'm saying. Like, I think, a lot of these things that maybe have been brushed under the rug for a long time, whether, like I said earlier, like the Me Too movement, and unjust that have been perpetrated towards minorities by police. The fact that a lot of that's coming to the surface now and getting addressed. I think a lot of these other nuances. Now, I'm not putting credit in the same conversation as that, or fiscal responsibility or education, but it's definitely something. I mean, let's be honest. I mean, what is the answer? I mean, we learned some of the dumbest shit in school, right? That you won't ever use, right? Ever.
Correct.
Like you won't ever revisit it after you leave school, right? Like stuff in social studies and stuff. Like,
Yes.
and you say to yourself, why on earth is there not a class to teach people at least basic understanding of this? I mean, there's not one class. I mean, I'm a finance major, right? I was a finance major, and they didn't teach you one thing about credit or leverage or anything like that.
Correct.
You know, so I mean, one day, hopefully, and you know, with that, I think it'll help. It'll help tremendously. You know.
Well, we got Joe Resto. He started credit repair, and his goal is to move to North Carolina. He's tired of New Jersey. He lives around. He lives in northern New Jersey too. So that's the goal. So a lot of times when people start credit repair with us, we want to know your goals so that we could position your credit report and scores to be able to do just that. All right. So I got a couple of questions over here from YouTube. And it says, question is, how do you fix your credit when you're currently on chapter 13? Mark Bowers asked that question.
Well, I mean, it wouldn't. I mean, obviously, the difference for anybody that doesn't understand, Chapter 13 just is a reorg. So you're basically restructuring your debts with your creditor, right? So you still have to make payments. You're just restructuring it, and you're getting different payment terms, and you have to pay out over a certain period of time, and you make one payment, right, to the court effectively, and they distribute the difference of those payments, as opposed to the 7, which is where they just completely discharge all the debt, right? You don't know anything. When that gets discharged, you're done and you move on. So as far as his question regarding the 13, I mean, for us, it's not any different. So, I mean, unfortunately, I understand for him the fact that it's still going and it's going to be going for a period of time while he pays through it. If it is him he's talking about, it's not going to change how to get the stuff off or to be able to get the stuff off, because it's the same process on our end. Again, you're adding when an account goes from paid to included in bankruptcy, the specifics behind that aren't being, like, the way it reports onto the credit report algorithmically doesn't change, right? They're adding a notation in the monthly reporting, and they add included in BK, right?
Yes.
And they're adding a chapter 13 under public record. There's not like any special nuance that goes along with it, you know, that as far as being able to get it removed. I mean, if you understand how they go on, you can understand how they come off, and it's not any different of a process on our end. The one nuance that I can tell you that I've seen over the years has nothing to do with this question, but that does require special handling is when somebody has this. You're not seeing them as much anymore, but a CPN.
Yes.
That CPN merges with the credit report because it's a manual merge. It doesn't end up being an algorithmic merge, so it ends up being a manual merge, so it ends up being tougher to remove. And anybody that's ever experienced that knows it, because it's very difficult on the. It can be.
We have some customers that have done stupid shit like that, and they get stuck with trying to do it themselves, and to no avail. You need an expert at that point. And at that point, you need someone.
No, for sure, without a doubt, because it you know. First of all, most people don't think that CPNs merge with the personal credit report, and they do, right? For anybody that's still buying CPNs, I thought that was pretty much done, but it seems that every bad idea continues to get reinvented after every couple of years. It's like movies, right? You know,
well, because the guy who is promoting it, he's in a boat and he's wearing these alien shades, telling people.
Wait, promoting what?
Promoting CPNs.
Well, I mean, look, CPNs going back a long time were really popular, right? Or the idea of it, the gimmick of it, right, was really popular. And then people started using them, and then they realized the limitations and things like that. And then people stopped paying them because they realized they weren't going to get to the point that it was advertised to them. And then they didn't think there was going to be any recourse. And then they started rolling onto people's personal credit reports. And then that's when the damage, you know, then it got real for them because they're like, how did this happen, right?
Yes.
And then, you're dealing in a situation where it's a lot of work to get it off just because how they merged it. But I got off on a tangent to answer Mark's question, though. It's not any different on our end. I mean,
yeah, and I have videos of us removing Chapter 13 bankruptcies. We removed like 3 all at once at 3 months of the person starting credit repair from Equifax.
Yeah, I mean, you don't see a lot of 13s.
No, because it's a special case. Those are special cases.
You see a lot of 7s. Right?
But don't you have to qualify to get into any chapter? I mean, there's a qualification that you got to go by. You just can't say, I'm going to let everything go to shit.
Well, no. So what happens is when you file with bankruptcy court, When you file, normally the 13s are a mix between the business and the personal, right? So you're restructuring. But the 7, the typical idea, and when you go to bankruptcy court, you have to give a list of your assets and liabilities. If you're solvent, meaning you have more assets than you do liabilities, you can't file bankruptcy. You have to be insolvent, meaning your liabilities exceed your assets. So you owe $500,000 and you're worth $200,000, right? And you have $200,000 worth of assets. So you're upside down $250,000. That would qualify you if you chose at that time, right? If it was something you wanted to do. But there is a qualification process. There's things for people that lie, bankruptcy fraud and stuff like that.
Yes.
There's and it's a big deal if you do, right? So there's definitely a process to have to qualify to get it. And the 13 again is more of a restructuring based, because my understanding is that it's a mix between personal and business debt. So as a result, they're basically going back to the court and pleading to restructure the debts. And most of the time they will.
Yeah.
And do it. But we don't see a ton of 13s though. You don't see a ton of people do 13s, right? You just don't, because most people that get to that point want to just get out from underneath it, right? They just want to move on from it and be done with it. I respect the people that whether they were forced to or not, that to see that they pay everybody back the agreed amount and move on. But it doesn't change our process in the remote.
Okay. All right. So I have Edward Crutcher. He says, I am 67 years old, still collecting Social Security because I make less than $70,000 a year. I have been with this company 6 going on 7 years. If I cash out my 401k account, will I lose this possibility my last year anyway? I don't know if you understood that question, Jay, but that's how he wrote it.
So if I understood his question, he's saying he's 65.
He's 67. He's 67.
67. So he can take. So he's old enough now to start tapping into his 401. He wants to cash it all out.
Yes, he says, if I cash out my 401k account, will I lose this possibility my last year anyway? I don't know.
Possibility to continue to collect the Social Security?
I guess.
I'd have to try. I'd have to understand what kind of Social Security you get, because that's when Social Security would start to kick in. Even if you got early Social Security, right? Even if you started collecting early, it's just a less amount. So maybe it was disabilities. I don't know.
He says there's a chance they're not going to bring back anyway after furlough is over. Why I was injured on job and lost sight right eye.
It's disability then, or is it disability or Social Security? He says
if I cash out 401k, this is a 401k.
No, I know, but he was saying he was concerned about losing. He wants to cash out his 401k. He's concerned about losing
my last year anyway. There's a chance not going to bring back anyway after furlough is over. When I was injured on the job, I lost sight in my right eye because of injury. Here, their chance to get a problem out the way without paying. If you could rephrase that question, Edward, if you still,
he can always, if he needs an answer, he can always email us. Just put it, be as detailed as possible, because it's difficult for me to understand based on the questions he's asking. So if you want to put it in an email, we can always email you back after we get done.
Correct. Now let's jump into Facebook. Facebook, my business page. Licious Williams III, which is our current customer, right? Yeah. Licious. I think that's Licious. Okay. Question. I just saw a brief news report about the new FICO score 10 and how it could knock personal score lower. I've never heard anything about this. What is FICO score 10 and who will it impact?
Right. So we talked about this in the previous one when they first wanted to do it. So FICO is owned, the idea of it is trademarked and owned by Fair Isaac Corporation. It's a publicly traded company. You can look it up on the stock market. So they roll out a product every year. Started with FICO 1. We're trailing right now. Most lenders use FICO 7 or 8. So just because they come out with it doesn't mean it's incorporated. they're using the. It's normally trailing far along. I don't know if you guys remember last year, not this year, but the FICO 9 that came out wasn't incorporating medical collections. Everybody loved that, right? It wasn't taking into consideration. It wasn't going to impact you. Everybody jumped through the roof. Like, the medical collections don't count anymore. Like, no. So that, just because they come out with it doesn't mean it gets used. They have to roll a product out every year. They do a lot of press surrounding it. It gets a lot of hubbub because of all the different adjustments they make. And that's the reason they do it, because they're a publicly traded for-profit company. They need to continue to sell their products. And in order to be able to do that, they got to market it and they got to be able to give it attention. It's all part of that machine. Now, right now, like I said, most places using FICO 8. Obviously, you can see that's 2 models behind the most recent one that's coming out. Normally, it trails, and they don't always use everyone. There's a number of them they haven't even used ever. So it's normally specific to cumulatively over the course of time, but it's not guaranteed to be utilized, and it's definitely not guaranteed to be utilized anytime soon, and more than likely won't be. So the answer to that question is, who's it going to impact? I don't know, because I wouldn't even want to dig into it this early, because I haven't ever, in all the years I've been doing this, I haven't ever seen at any point in time the year they roll out a product that gets utilized, much less utilized at all. Some of the more extreme ones don't even get used. So we'd have to see how that plays out over the course of time. I'm sure if this does get used, it won't get used for a while. And I'm not sure it's even going to get used.
Okay. Now I have I hope we answered your question, Dishes. We have a question on YouTube from Pata. And Gizzy, can late payments be removed with the do-it-yourself credit repair system?
Yeah, we get this question a lot. So with ours, whether it's us doing it or with the do-it-yourself system, the $99 one, if there's 1 or 2 or 3 lates, normally you'll get them off with using our systems, right? And we're the same way. We tell clients this. Anything beyond 3 lates, right? You're trying to perform surgery on an account. It's very difficult, right? There's a lot of exactness that needs to be done, and most files that come to us don't just have 1 account that needs 1 or 2 or 3 30-day lates in it. I see some people that have like 10 or 11 30-day lates over the course of like 3 years, and they're going to get all the lates off and keep the account, saying, listen, 3 years is 36 payments. You have 11 lates. You've been late 40% of the time. Just lose the account. It's going to take you forever to get it off. There's no point keeping it. You only have, in that instance, you only have 20 payments that were done on time. So it's like, you can just open a new account.
That account is 6 years old, and it has a whole bunch of history. Removing it is going to even be a worse situation if I remove it all. I want to keep it.
Yeah, we get that a lot, right? And then we tell them the right answer, which is the fact that all the points you get for those loans is factored in when it reports on the credit report. And when it comes off, you lose points, right? Meaning, like, when you pay it off, you'll lose points. Not when we remove it. When we remove it, you'll gain points, because you're losing points as a result of the late payments, right? So those late payments are hurting you more than the perceived positive history from it is helping you, because when an auto, we talked about this in previous podcasts, when an auto reports, you'll lose anywhere from 10 to 15 points when it actually reports on the credit. After you make the first 2 or 3 payments, you'll see it scale back up. You'll recoup those 10 to 15 points. Then you'll get an additional 10 or 12 as a result the following month, and that'll be it. At that point, that's the extent of the points you're getting from that loan, and that is priced idealism at that point. Meaning, if you go late on anything, you torch it, right? You're going to get smacked with a lot of lost points associated with that late. Now, you're not recouping that as a result of making more payments after that fact. It doesn't work like that, and I think that's a huge misconception. So you're recouping it in other ways, right? The other things that are evening it out and the lost points that are associated with that late you get from that particular account. Now, some people want to just pick it apart and keep it for a couple pays on time. And honestly, in all fairness, when you get beyond 1 or 2 or 3 late pays, it probably doesn't make sense to keep the account.
Okay, so John, I got a question for you, right?
What's that?
I got a question for you on this topic. I have that car loan with 3-4 lates, and it's an open. I'm about to pay it off in 6 months. I want to keep it because I've been paying off this car for 5 years on time. And it'll be a good thing to have a paid off car. Yeah, but you still have 4 late payments. Am I right?
Yeah, 4 late payments in a situation where they're expecting not to have any.
But check this out. Okay, I'm making payments on this car. My credit score may be going a little bit up. every month because I still keep payment. But
Yeah,
how about
that's not what? Hold on, let me stop you there. That's a misconception. That's not why it's going up. The same way we've explained in the past, everybody thinks the score drops because you added one inquiry, right? I've heard people reconcile a 15-point score drop from one inquiry, right? Oh, it dropped 15 points. No, it didn't. No, it didn't. It didn't drop 15 points from one inquiry, okay? If you're not using Credit Karma, let's put it that way.
correct?
It dropped 15 points because your credit usage went up and you're not paying attention to that. The same reason why they're thinking that, you know, the auto loan over the course of time when you're paying it is evening back out. The reality is it's other areas that are helping to boost it up. Like maybe your credit usage went down, right? Any number of variables, actually it's kind of limited, but mostly that 35 to 40 point swing that we talked about in the How to Raise Your Score podcast, that has a lot to do with people's misunderstanding about where points are allocated, right?
Yes.
They don't know that the cards are poured in a different time each month. They don't know that when, you know, you have a smaller card or a smaller amount of limits, it's just as important as a larger amount of limits because you're using the same ratio to ascertain that point advantage, right? So they just make natural assumptions. If they have a $500, you know, first Premier card and they're always maxed out on it, they don't understand why their score is low. Well, you know, that same ratio that you have on $500 is the same as somebody who has a $50,000 limit, right? They're maxed out on that $50,000. That same associated ratio is what ties back to the report. When you're down at zero, you're getting 35 to 40 points in bolster on your credit, right?
Correct.
When you're maxed out on that, you're losing that entire amount. So I think there's a misconception. I mean, the answer is question originally, you know, I mean, it's possible you could get more than three. We typically tell people historically.
But Jay, before we answer the question, at the 6th month, when you have this car for 5 years, you got 4 late payments in that car loan. Yeah, you want to keep it because it's a paid off car loan. But then at 6 months, that's it. You pay it off. Your point's going to drop. On top of that, you got 4 late payments on that account.
Yeah. Well, no. Listen, the way I look at it and the way I always look at it, and it's very binary, right?
Okay.
If you have leads or any kind of negative activity on any kind of target, negative accounts are like pressure. I say this to the client. Negative accounts are like pressure pushing your score down, right? It's just a fact. Every time you remove one of those lates or some of that negative reporting, you release that pressure and the score goes up. Now, the only people that know that are the ones that work with us and they physically see it. When the account comes off, the score goes up, right? It's a very binary reaction. This happens and then that happens, right? So, I mean, it's very simple. So, when you have 3 or 4 late pays on something, you remove that account, you're going to get points, more points than you had when you were paying it. And Gizzy's absolutely right. When that gets paid off, you're going to lose. When a loan, it doesn't matter if it's an auto loan, it could be a personal loan. When you pay it off, you actually lose points. You lose those points that you were gifted after the 3rd month of making your payments on times when you first originated. So you effectively lose those points anyway. So by the time that's paid off in 6 months, you'll see, again, you know, all we do is give the right advice and then you actually see it later. You can choose to utilize it or not. But the fact of the matter is, when you pay it off in 6 months, you're going to lose 10 points, which is probably going to set you back to where you were originally before you thought that you were making extra payments that were somehow aiding it and keeping the history was somehow providing you. Now, the reality is that does that history work for, if you have 4 late pays on a 60-month loan, that's effectively 1 late a year, right? So, you have 4 lates on a 5-year loan, you're late once a year. I mean, that's not no disrespect, but that's not a tremendous ratio for a lender, right? If they're lending you a certain amount of money and you go late once a year when the idea is that you're getting graded on paying them on time, that's not something that a lender's going to look at and say, you know what, look, this guy ran it out 5 years and paid it off, but he should get credit for that. Nah, these are all done algorithmically. So when you're late at all, it's a problem.
Does it work the same way if it's an open account and you have 4 late payments? Is there a more possibility that the 4 late payment or the account will be removed if you go after 4 late payments on an open account? Or if the account is closed and you go after these late payments, will the late payments be removed, or will the whole account be removed?
No, it's the same process. There's not any more favoritism if it's open versus closed. It's not going to be any different. It's just the process, right? I mean, it's with the way we're going in and removing these things, and with the way they're being removed, whether it's an open account or a closed account, it really doesn't have any bearing because again, you're disputing through a process through EOSCA, right?
Yes.
So that's the system that they use to communicate with the creditors. So I mean, it is a legitimately coded binary process. So I mean, it's what they call it. So I mean, it doesn't matter if it's open, it doesn't matter if it's closed. There's not all those variables that are coming into to play in how these are being arrived at. I do know, again, from all the clients that we've helped and all the times we've done this, typically speaking, our sweet spot is somewhere around 1 to 3 lates. We can normally get the lates off.
Well, the person with the question said only one late on the car loan.
I thought it says 4.
No way.
Didn't you just say 4?
No. I'm giving you an example. I'm giving you an example.
Then if it's 1, if it's 1, depends how recent it is, and it depends how there's a number of variables that can come into play there. But I would think within 1 you could get it off. You know what I mean?
Correct.
I mean that's a different situation. So yeah, I mean it's not going to need any special handling in order to do that. You would just be within the broader context, and it would. For just 1 late, it's a different situation. But like I said, 1 to 3 is typically you move the lates, you keep the account.
With our $99 do-it-yourself credit repair system. So Pata, definitely you can use it. Okay, we have another question. Do you wanted to put anything else on that last question?
No.
Okay. How do you get this question is from SSD. How do you get evictions off that showed up on Experian Rent Bureau, but not on TransUnion, Equifax, or Experian? The Zillow Rent Hub application cites Experian on the report, but evictions are not on Experian or the other 2 bureaus when I use Smart Credit or Identity IQ.
Yeah, because the Experian Rent Bureau is merged with a public record source. So they're getting courthouse records. So you're getting 2 parts to that report. I mean, I'm a landlord, so I've personally seen them myself. You're not just getting the traditional credit report. You're also getting all the court records associated with that individual, and it comes as part of it. So that's something that you can't negate. I mean, that's why they do it. That's why they merge it on the other side with the public record information, right? The dockets and stuff. It'll show literally, just because I know from experience, it shows the credit report, and then it shows a whole different section which shows every court case against you since you were born. So it'll show how many eviction cases there were, how many landlord-tenant cases there were. Literally, even if you won, it shows them. So a potential landlord can come in, and the landlord can be like, this guy showed up in court every single time. He's rented a property. Whether you won or you lost, it shows all that stuff. Obviously, it shows the eviction as well. It recognizes all that stuff, so it gives the landlord the opportunity to make the decision over and above just a credit report. And a lot of landlords don't use that, by the way. It's not that common.
Okay. Who uses that then, Jay?
Well, somebody that knows what they're doing, but I mean, not everybody knows what they're doing, right? So I mean, a lot of the more traditional or individual landlords, I guarantee, don't do that.
The Zillow Renter Hub application cites.
When you're saying Zillow, you mean Zillow?
Zillow, yeah, Zillow.
Okay, say that again. Zillow Rental Hub application. Is that what you said?
Yes.
Yeah, because Zillow probably is the one that filters the tenants for them, right? They probably market it on Zillow, and Zillow filters the tenants for them, and as a result, they're going to great lengths because they're probably making a fee off it, right?
Yes.
That's why they're going to that extent, though, right? Like if you went to like an apartment complex, depending on how nice it is, I mean, all of them go to differing levels to make those determinations. You don't see it a ton, though, where it's not done a ton of times where they add in the public record stuff with it, but it does happen. And depending on, I know personally, I mean, it really is case specific for me, depending on the situation that's given on the application, right? So,
but because you're looking at it, because you are, what you said,
I'm versed in a lot of this stuff, right? So I that's why I'm saying that a lot of people that are versed in a lot of stuff and aware of it, your individual or might own a handful of properties, or you know what I mean?
Yes. But that's what I mean. So, but you don't look at it personally. You have what do you call those people that go and property manager, yes.
But I get to look at obviously I look at the application, obviously I look at all that stuff, right? So I mean, I'm able to make the determination based on the prospective tenants and based on what they provided, right? So, and there's things that you can notice in an application. Like somebody's constantly moving and the lease terms are short, right? Like you see somebody live somewhere for 6 months and then 7 months and then 13 months, just odd numbers, right?
Yes.
it's possible they could have gone month to month, sure, but not on 7 or 8 months. Most landlords are giving you a 12-month run, right? Or are giving you a 6-month run. Most want at least a year, right?
Yes.
So when you start seeing odd numbers, other things will stick out, right? That'll make you want to kind of take that additional step, because those reports cost more money, right? So I mean, they're not. Obviously, there's additional work required, so you're going to go to an additional length because somebody piqued your interest. But yeah, I mean, I don't think a lot of people do it. I'm sure that's why that particular individual, because they went through Zillow, had that happen. But whatever, what they see on their personal credit report, they're not seeing that eviction. I believe I heard them say that they're not seeing it on their Experian business, or they're just Experian credit report. It's because they're incorporating the public record side of it, which is causing them to incorporate, and then they get to see everything at that point.
So you think Avalon?
It's pretty in depth.
So you think Avalon? You've seen those apartment complexes by Avalon?
No, what's Avalon? I don't know what that is.
That's they have a bunch of whatchamacallit?
Communities type things.
Yeah, they have a bunch of apartment complex, like high end or luxury apartments.
Yeah, do I think that they would use it? Is that what you're asking?
Yeah.
Again, it depends on the landlord, but maybe if they're expensive, sure. I mean, because it's possible. I just look. I throughout the course of years, I've helped a lot of real estate investors too, right? Like on the credit side, and they're renting to tenants, and and I've had this conversation a ton of times. So it's kind of specific. You don't see it all the time, but you do see it sometimes. Let's say you see it less than you see it more. You definitely have to see them pull credit, right? That's pretty consistent. And I don't pull it with every tenant I take, but it's normally only certain things that trigger, because it's an additional step you have to take. You know what I mean? Somebody looks good on paper and everything adds up, and there's nothing to trigger that. Their credit report looks great. Everything else looks great. Their history looks great. There'd be no reason to take that additional step, right? But if because it is an additional step, so I mean, it just you get to see it human, but it does happen though. Unfortunately, for some people.
Why is it that people say, "But I make $100,000 a year, or I have money in the bank. Why can I get this apartment for $1,500 a month when I have money in the bank?" But yet they want to see that you have a job.
I mean, unless you're paying because I mean, it depends on the type of community, right? Like I know some communities, they want you to make at least 2 times the annual monthly rent. So, for instance, let's just say your rent's $2,000 a month times 12 is $24,000. They want you to be able to show that you make at least $50,000.
Okay.
Right? Can't have to have a certain credit report. The liquidity isn't really the question, right? I mean, unless you intend on paying the full lease up front, which I don't think anybody would push back, right?
No.
It comes into play when people want to be extended. When you're renting a place, you're effectively extending credit to them, right? They're staying at your house. You expect them to not beat the shit out of it and everything like that. So, as a result of that, when it comes to the situation, and honestly, over time, it's gotten more and more strict, right?
Yes.
So the norms have definitely tightened up and contracted as far as making it harder for the tenant to get into the place. If it's a nice place. But I mean, I think some of them are set justly, right? I mean, I think you need to be able to show you make money, right?
Yes, of course.
I mean, otherwise, pay cash for the whole year up front and call it. Nobody's going to, I guarantee any landlord's not going to say no if you tell them to pay the whole rent up front, right? You're not going to get any pushback. So,
well, I have another famous question from SSD. I was hoping you could freeze the bureau. I was going to freeze LexisNexis, CoreLogic, Pacer, etc., and hoping that will solve it, as it wasn't on all major 3 bureaus.
Yeah. So I don't think just for the record, I haven't ever pulled a public record personal for a tenant with Equifax and TransUnion. I've only ever seen it on Experian. So I'm not sure they even offer it on the other 2, just for the record. I'm not sure that they do. The only ones I've ever pulled have been on Experian, and it's tied up with Experian because it's an additional service that Experian offers. Now, moving on to the freezing. Here's what I can tell you about the freezing thing, and this is something that's come up with the people that listen to us that I've had to help them through it.
Correct.
One thing that I've arrived at, because like every other gimmick that goes on, there's always a fallout from it. And this whole gimmick started like maybe a year and a half ago with the whole freezing everything. And
it's been popular lately.
No, I mean, it's like anything, right? I mean, they come and they go, right? But the one thing that's starting to happen now, though, that we've had to reverse engineer now at least 3 or 4 times in the last month, is that it's causing split files. So it's splitting people's files. So what happens?
Okay, you gotta explain the split file to people that don't know.
Yeah, that's what I'm gonna do. So what's happening is people are going in and they're freezing all these 3 things, right? And then they're going in and they're claiming fraud, right? That this is just a model. This is the model among other. They're going in and they're filing fake fraud affidavits, doing all this stuff. They're freezing these bureaus in an effort because they think this is the recipe for success, right? And then when it doesn't work, right? We're getting that client, right? And then we're going in and we're cleaning this bureau and cleaning that bureau. Here's the problem, though, right? So we just had this with a client. We cleaned their Equifax, a month ago, 2 months ago, maybe. Actually, they just got an auto loan with one of our lenders for 2%. And this.
Dope. Who is that? You got to let these people send us a copy, a picture of their car when they refinance. For
Hold on. Let me finish the point because it's gonna get not complicated, but I want to make sure I explain it. So what's happening is anytime you file fake police report or a police report of any kind and a fraud affidavit, out of your protection, the bureaus effectively start a different file, right? Because they think the initial file is corrupted while the dispute's going on. When they determine that it's not legitimate, right, and when they're going and they're freezing all these other variables that come along with it, whether it be the LexisNexis or the CoreLogic or whatever that other stuff is, what ultimately ends up happening is that ends up going with that new file that gets formed, right? So they're basically freezing all that stuff while they're filing fraud. Well, if the bureaus determine that it's not fraud, right, then the existing file stands. You understand what I mean? So the existing file that was set up stays, but there's this other file now that was set up that's floating around out there, right? So what you'll see on certain sites, depending on how the personal information was submitted, you'll see 2 different files, right? You'll have a file, like for instance, this particular client I'm explaining, we cleaned off their Equifax. Their Equifax was clean. We cleaned it 2 disputes ago, right? We cleaned off stuff from the other bureaus. He's been updating it on the one site. Fine for the last 2 months. Then just out of nowhere, he updated it the other day. This whole different file presents itself, and I go, "Wow, this is weird." I go back into the My Equifax bureau, right, which is the back office for Equifax bureau, right?
Yes.
I said, "Look at this." I send them all, Equifax is showing clean in their system, right? So then I go and I dig in even further, and you go to see that they're effectively what happens is, depending on the particular how the information reads and what particular like the information that the individual inputs when they're setting up the profile with that site, it could potentially show a completely different report. There shouldn't ever be 2 different reports you see anywhere, right? If you see a report on myequifax.com, it should be the exact same Equifax bureau you see on IdentityIQ, Experian.com, etc. There should never deviate if you update them all in the same day, right? It should all be the same. Everything should look the same. There shouldn't be a deviation. So what's ultimately ended up having to happen is now these clients are having to go back because their bureaus have been clean, and there's files now out there that we now have to purge and get that clean, right? So it ends up being a shitstorm of ridiculousness as a result of
what a mess.
It is, man. It is, and it ends up being such a mess. And the whole idea and the whole objective of doing it in the first place was to freeze all these things because the idea was that they're not going to report. That doesn't stop it. It doesn't stop it, and only the people that have been through it for all these periods of time realize that it doesn't stop it. They still. I couldn't tell you the amount of people we've got that have been through those programs time and time and time. And I'm not here to crap on anybody that does it that way. More power to them. If it works for them, I think it's great. The clients that we've gotten that have been roll-offs from that program, we're constantly having to fix this stuff and work around it. And all these public records are still on there. We have one client in particular who I was communicating with today, who said he did it a couple years ago, and now he's just having this issue with potentially having a split file. And he froze these things years ago, but he's worked on it for all those years, but he still has his bankruptcy on there. So if it was just that simple, you assume 2 years ago it would have come off, right?
Yes.
If it was just that simple, you just freeze and dispute it, boom, poof, it's gone, right? It wouldn't still be there. It wouldn't be there after 2 years. So I just think that with any gimmick, which goes along with the CPN we talked about earlier, and this now, I just feel like there's always a fallout, and this is the fallout that's kind of happening as a result of this stuff. I mean, again, I've seen a closer concentration of this over the last month than I've seen in the previous 12 months. But maybe it's something new that's happening. I don't know. But every person that I've seen with the split file has done it that way, right? They've all frozen their other stuff. It's the exact same scenario. Every single one of them that we've had to merge the files later on. Previously disputed the exact same way, with part of it entailed freezing the stuff.
Well, right now, Andrew Johnson is saying my file was split and John helped me out. Really easy process. Was it really that easy, John?
Easy to merge it, he means. He had to wait on hold with them, and then once he got them on, they told him all the stuff they needed him to send. He told them that they were able to find the second file. He's an example. I didn't want to throw his name out there unless he was okay with it, but
he just commented that it was him. Well, that you helped him out with that split file.
He's one of the people that are detailing my example, that where he didn't understand at first why it was happening, because he saw two different files. We had a certain file on my Equifax. He was seeing something different on Experian.com, like it's a split file. I guarantee it. He calls up, of course it is, and he took care of it. He had to send him over some documentation, and then typically it takes a couple of days to merge, and then poof, you got your one report back, right? Which is what you want, right? And then it gets back. But some people don't want to wait on the phone. Andrew was patient to wait on the phone and call at the right time and do it all the right way. But some of the other guys that were on hold for 2 or 3 hours to get somebody on the phone. So I mean, it becomes an additional step you shouldn't have to take when you're trusting somebody to do the right thing, though, right? When you're hiring somebody to do a job, you shouldn't be still reeling from the effects 6, 12, 18 months later, right?
Correct.
You shouldn't be shocked by how something was done that maybe didn't go the way it was anticipated, right? Correct. You shouldn't have to take your way out. And these are things that we don't, in theory, like for instance, the client I was just talking about. I mean, we did our job, right? I mean, his file is clean in certain areas, in the areas we discussed. Theoretically, we don't really have to do that. We do that so he doesn't have that following him around. You understand what I mean?
Yes.
And it's not a situation. Now we're having to remove more stuff again when he merges it from his Equifax, because it's 2 totally different files, and which I'm going to do, which is fine. But it's, again, we're cleaning up other messes, right? But it's for the betterment of the client, so that when the client leaves us, they don't have to look in their rear view, right?
Oh,
they're set and they're good, and they can drive off into the sunset at that point, and they're under the right interest rate.
Well, SSD says, so there is no disputing or freezing ? I just have to rely on that most landlords don't use that rental source ?
I've been doing this a long time, as we always talk about. I'm not aware of any public record way you can dispute public record information. Like, you can't dispute information on LexisNexis. You can't dispute, public record.
But John, doesn't it report if you pay it off? Doesn't it report as a paid off?
Well, look, when you're getting that, like, I'm just telling you what you get when you get it. When you get it, it shows all the times that individual's been taken to court.
Oh.
It doesn't matter if they pay it. It tells you if they get a judgment. It gives you the whole lay of the land. That's what I'm saying. Like, it gives you get the credit report.
Well, listen, that's the thing that I tell people when they contact me and they want evictions removed from the credit file. I say we could remove it from the credit report, but when they go and run your credit, they look at.
Well, there's two things. There's two things to that, right?
Correct. They look at those bureaus, the LexisNexis and stuff.
Yeah, so there's two things to that. So there's this example, which again is unique. It's not common. It's not as common as you would think, but it happens and I think a lot of people treat it the way I treat it. But there's also the scenario where, the individual when they run it, they can literally just once they get the information that comes out of there, it gives them a whole different bed of information as it applies to the individual that's renting. Outside of that, there's no way for them to dispute a public record source, because it's literally just court dockets, right? It's information. You put your name in at court and it comes out, right? So it's telling you if there's been a landlord issue. It's telling you got a credit issue, things like that, and it coincides with that. I mean, the way around it is to obviously, you don't see it on the credit report. And most lenders are pulling just credit reports, which most of them are. They're just doing credit checks. because in essence they really want to get you, especially some of the bigger places that aren't as nice. They just want to get people in the door.
Correct.
You know, I mean, there's a lot of competition out there. But if you're dealing with a higher end place that wants to make sure that they're getting a certain type of client, they're going to jump up the income requirement. They're going to do a little extra diligence and pay for it to make sure that the rent gets paid. Or if you don't pay, they can take you to court. Now, there's some landlords that'll run it all the way through. They'll take you to court. They'll get a judgment against you. They'll do the whole nine. Then it'll report on your personal credit, right? But if they just take you to court and you guys settle it at some point or whatever the case may be while you're at court in landlord-tenant court, it's not going to show on your credit report, but it's going to show on public record that you were taken to court. You know, it's going to show all that stuff as it should. I mean, good, bad, or indifferent. So to answer his question, I'm not aware of any public record database that's disputable. I mean, you know, I know you guys can call and freeze these public record databases. I don't even know if that even really works when you freeze it and stops reporting information because I haven't seen it. But if it does, I'm not aware of any disputing capabilities because effectively, again, it's coming directly from the court. So I don't know how you could dispute the court without going to court themselves. As far as, like, you know, what was his other part? He said no disputing and no, what was the other thing?
So there's no disputing or freezing. I just have to rely.
He can, hold on. I want to be clear about something, and I said this earlier. You can do what you want, right? You can freeze it all you want. Go freeze it. We're going to give you the advice that through 11, 12 years of experience, and more recently, you know, seeing this over and over and over again, and almost 11,000 clients we've helped over that period. We're going to give you the advice that we know is fact and we know is true. That doesn't mean you have to listen to us, right? I mean, I say this all the time. I'm going to give you the knowledge that you can have and you can utilize it in your best interest. You can also go your own way, right? You can listen to it. You can think that it's not true. But when you realize after the fact that I was right, then you'll understand that we're just not blowing smoke here. We do this stuff really for the purpose of trying to help the client, trying to help people so they don't get put in bad situations that they ultimately don't know how to get their way out of. I mean, just think for instance, just think Andrew, like just as an example, right? If we weren't able to explain to Andrew that his file was split, he'd be dealing with that forever.
Oh my God. You imagine just being Andrew and just punching the air.
Think about that, because honestly, this is the difference, though, right? This is a very clear difference. His Equifax had one amount of negative accounts, which was almost done. It was almost done, right? And then his Experian had a totally different scenario. So you're talking about two totally different credit grades. So he'd effectively, if he wouldn't have merged this, be holding his breath each time somebody pulls his Equifax because he's not going to exactly know which one they're going to pull. You see what I mean?
Yes.
So either they get the good one or they get the not so good one, and that's the difference between an approval and a denial. You see what I mean? And people don't know that because they're not going to make sense of it because there's some people that actually believe that different sites show different credit reports, right? That's a question we get a lot. Like, which report do you want to see? The one on Experian or the one on Identity? Well, they should be the same. Well, they're not. Well, they should be different, right? There's not ever a time they should be different unless you updated them at different dates and something changed between that dates, right? Between those dates. It's the only time something should deviate. Otherwise, it'd be the exact same report you're looking at all the time. So, you know, it's just stuff like that, right? We're going to give you the right information. You can take it to use it. But I mean, as far as that's kind of like the reason why you add that public record with the Experian on the rental side is to get that advantage, right? It's not in most cases, it's not manipulatable like a credit report can be. So you add it to make sure that you're making the right decision. It's your silver lining, right? So it's answer his question, unfortunately, not that I'm aware of in that situation with the rental side of things.
So he's gonna have to go to like a second floor, third floor type of place,
or just get a landlord that's more flexible. I mean, sometimes landlords will be like, "All right, you know what, you're a little more risk. We'll ask for more security deposit, or we want an additional month on escrow." You know what I mean?
Well, he just finished saying right there, I appreciate the insight and will heed your words. I just wanted final confirmation of what I could do. I will listen to what you say as you are the expert. Thank guys.
Yeah, I mean, look, we just want to give you guys the right information so you don't make your life worse, right? I mean, that's what all this stuff is about. We want you guys to be able to make the right decisions on your own and have the right set of tools, knowledge-wise, to be able to make that decision. That doesn't always mean you agree with us. I mean, Gizzy's been there. I've had long conversations with clients about what is the right thing to do, and some of them are adamant about. You know, we had to talk with a client of ours. What was it, last week? We had that client that it was the same auto loan issue. We talked for 30 minutes. I explained to him that the rates on the auto loan were hurting him more than they were helping him.
Oh,
And I went through every variable, and he asked a lot of good questions. And he's like, you know what? I hear what you're saying. I appreciate what you're saying, but I want to keep it. Okay.
is that
Fair
the guy with the luxury car?
I don't think it was.
The whatchamacallit, the Maserati?
No.
Oh, okay.
No, it's the guy we talked to. He was last week, but no, it wasn't the guy with the Maserati.
Oh, okay.
But that's it. That's the thing, though. We're going to give you what we know to be fact because we've seen it. We do it every day. But that doesn't mean you have to agree with it. You know, it really doesn't. I mean, you just take. We just want to give you the right answers.
But what's he gonna do now, Jay? Because if he makes good income but has this, messed up situation with his credit, is he gonna have to downsize and go to another place where it's gonna be a little cheaper?
Because there's tons of landlords that. Again, it's not everybody pulls that. First and foremost, you should probably not go through Zillow because they're gonna go to extents that most standard places will not. Okay, and one of them being that particular thing that you referenced. So I mean, it would probably behoove you to go directly to whatever place. Call them directly. You know,
Yes.
Zillow is not a rental agent for that place more than likely. They're just trying to figure out a way. They probably worked out an arrangement with that particular landlord to get them more exposure so that they can get some sort of a placement and a property management fee for placing the tenant, right? And in order to do that, the better they can find the tenant, the more A++ they can find the tenant, the better they do for the landlord, the more business they get as a result of it, right? So
Yes.
it's their way of showing improving to that particular landlord. The way you work around that is just call the landlord directly. Or if it's a building near you, call them directly. Don't go through somebody else. More than likely, any big development has an on-site place that you can deal with directly. And chances are they're not going to that same extent in a lot of cases.
Do you think, like, would you take on a tenant that goes to you directly, or would you take on a tenant that will go through a realtor and then have to contact you? Because the realtor is getting paid, not that you're paying him, but the realtor is getting paid the commission from the deposit that I'm getting.
You are. It is coming out of your pocket, though.
It's coming out of the renter who's in the rent.
Right, but it's rent that's coming to you. No, they typically get, most rental agents or realtors, etc. They get like the first month's rent.
Yeah, they split it up with their broker.
Yeah, but that's coming out of my pocket. That's my first month's rent. So I'm paying that. The tenant's not paying that.
No, I'm paying that.
You're paying that to me for that first month rent, so you can live there for the first month, right? And in essence, they're keeping it. So that first month, I'm eating it.
Oh, you have to eat it.
I'm eating that first month. Yeah, it comes out of my end. You're paying me first, last, and security for argument's sake, right? I keep the security in escrow. The last month stands. They get their fee is typically the first month. So that first month, it's great. I get a tenant in there, but more than likely, if a realtor set it up, they're keeping that. That's their commission.
Okay, I get you.
Do you understand what I'm saying?
Yeah. So you pay the. I thought I pay the renter from the money that I give for the deposit.
No, I mean, it would have to go to us and then to them, right? So you would pay. It's effectively coming out of my pocket, right? You understand what I mean? Like you're giving it to me to live there. So you move in September, and you're running September to August as your time. You're paying me September, you're paying me August, you're giving me the security deposit, it's equivalent to 1 month's rent. They turn around, they get September's, and that's their fee coming from. But they're backing out of the transaction, but it's effectively coming out of my pocket. Do you understand what I mean? Because you're living there, and I'm effectively not going to give it the first month because it's going in their pocket.
Talking about that deposit, right? The 1 month and a half deposit.
Everyone's different. Some are 1 month, some are 2 months, right? So it really depends on. And
Okay.
that allows a landlord to kind of get some more security too if you're a little uneasy about a tenant, right? If you want one and you need one, but you're not totally crazy about the risk. So that's another way that guy could maybe get over, give him a little more in the deposit. But finish your question.
Okay. At the end of my year, right, I get my deposit back. Correct?
I mean, assuming nothing's beat up or anything.
Assuming nothing's beat up. Okay. How about right now during these COVID times and during these people don't have any jobs? Do you go and you take that deposit and you go towards the rent? Like if they're gonna be late this month, do you go towards that rent, or are you gonna use that money to fix up the place after they move?
So you're saying somebody that didn't pay their rent, that was like, that fought you on it? Is that what you're saying?
Not fought me, but I don't have the money this month to make your rent payment. Can you take it
Right.
from
So
the
they're
deposit?
utilizing like whatever moratorium is being provided to them.
Correct.
Right. So, I mean, that really, because I know there's been a moratorium on evictions or rents, and I don't know how, I haven't had that issue, So, as far as, like, I don't know how that works as far as what they can do collecting after the fact. My guess is that, I don't think it's going to be a freebie. I think when it comes out, and I think it comes out the end of July, that moratorium ends, and I think when that ends, you're going to see a lot of court cases that are going to get submitted immediately, right? And
Yes.
then you're going to see situations where
Some people are submitting it already. A lot of real estate investors are submitting it already.
Yeah, they probably did. I don't think you can evict somebody though until after that period. So they're just living there rent free. And I mean, if you did go to court, when you go to court, they're going to back it out of whatever amount is on deposit. But in theory, you can't just arbitrarily typically take that. Most landlords do those, especially smaller ones, but you're not really supposed to until you get some kind of an order, right? Because in theory, that money's supposed to be sitting in escrow earning interest.
Yes.
So in theory, it's not supposed to be something you can just take and use arbitrarily whenever you feel like it, right? It's supposed to be, in an escrow account earning interest untouched until the time comes when you move out, at which time that happens, or unless there's some litigation where you're awarded that money clearly, right?
Correct.
So obviously, if you move out and there's a reconciling that requires work to be done, obviously that needs to be provided to the tenant. You're backing it out based upon that, and you're cutting them a check. The difference from the escrow account, but again, just arbitrarily taking it and applying it in certain situations, although I know tons of people probably are, you're really probably not supposed to do that.
Okay.
That makes sense.
So SSD. You gotta.
I think he'll be fine. I think the thing, if it's a he, maybe she, I don't know.
Yeah, I don't know. There's a sunflower. His.
But I think that I think that the way you probably went wrong was going through Zillow, because they're just going to go to extraordinary lengths more than likely in an effort to try and filter out.
What do you think of apartments.com? I mean, is that a national thing, or is that just like a Jersey thing?
Apartments.com?
Yeah.
I assume. I mean, it sounds. I'm not familiar with it.
Oh, you're not familiar with? Oh, there's a whole bunch. That's probably a Jersey thing then.
No, I'm sure it's national. But but the point I'm trying to make though is not going through it. You could just any one of the things you see in apartments.com.
Yes, it's a sheet.
You can just call them direct.
Yeah.
Just get the price points on those sites, and honestly, they may be ticked up on those sites too. You don't know. You may get a better deal calling the landlord directly. These places may tick up to make a little bit of money residually if they're trying to do that. I don't know what the arrangement is with the particular landlord. So, I mean, you may even get a better deal if you go in and contact them directly anyway. They're not going to revert you back to apartments.com. You know what I mean? They're not going to be like our exclusive listing agent is apartments.com. I assure you of that. They're not going to turn you away if you call them and say, hey, listen, I want to rent your place, and you may get a little more. I think the problem they ran into was just going through Zillow. Personally, it would make sense, because if I was putting my stuff on Zillow and Zillow was offering to handle it, I'd expect them, because they're just going to have so many viewers and so many potential applications, that have to go to a heightened level to filter out the good from the bad, right?
Yes.
As opposed to your walk-ins, you're probably not getting nearly as many walk-ins, right? It's just how it is. It's just people do everything in their computer now, so you might be able to get away with going around it, but.
There's a lot of these apartment complexes that just are apartments.com or everywhere. But, if you see an apartment complex and you see, call the rental office and contact them directly.
Yeah, I mean, there's no downside. There really isn't any downside whatsoever.
Yeah. So, I mean, that's
honestly, hold on. Let me take one step further, though.
Okay.
Even if, just for the record, I don't know how old the eviction is, but don't let it stop you from doing it, because honestly, although they might run an additional inquiry, there are ways to feather out that risk to a landlord, right? I mean, like I said, they may ask for more if you make more income, if you're willing to put more money down as far as a deposit and everything else to give them more insurance. That doesn't necessarily mean they're just going to shoot it down. That's why I'm saying if you deal with the landlord directly, or the rental office, you may have some more wiggle room than you would dealing with like kind of a front load like Zillow that is dealing much more from an algorithm and approved credit level, right? They're just nope, right? Rather than that kind of that gray area you may be able to get away with by going into the rental office or the management office.
She said that report had my whole life on it. Arrest record was listed as a section. I don't have any arrest though. At the bottom it said check and with a lowercase r, checker, something like that. Check and then the lowercase r.
Yeah, but that's why I was saying like it shows everything. You know what I mean? That's what I was trying to say earlier. Like you get literally everything that you need to make a decision
as a landlord.
It's extensive, but not everybody uses it though. That's what I'm trying to say. Like it's not that common. I mean, I'm not saying it's uncommon, but it's not like every landlord you go into is not going to do that. I assure you of that.
Yeah. So what is, I mean, I hope we answered your question, SSD.
Yeah.
Aside from the economics of everything that's going on right now, what are you seeing, with, I don't think there's going to be any more riots, to be honest. Jay. Let's just pray that stops for once. And now you look at everything that is, the damage, like as economically, do you look at the damage and then do you look at what's going to be the rebuilding phase? Like how are you going to get better?
As far as cities are concerned, or just
as far as cities and the area.
Well, that's kind of what we talked. Well, not kind of. That is what we talked about last week. And if you remember last week, one of the things I said is that with a lot of these businesses, they have commercial policies, right?
Yeah.
And commercial policies aren't like your personal Allstate homeowners policy, right? It's not the same thing. It's a totally different scenario. When you call up your adjuster for Allstate, the guy shows up the next day, cuts you a check for your leaky roof or for your, the dent in your car. You have it in 3 days. When it comes to insurance stuff, I mean, it's much more in depth, especially when you're getting blanket type, a massive amounts of loss, right? They take their time. They go through it. I was just reading, literally Wednesday of last week, because I know I talked about this Monday. There was a whole story on it about how the insurance companies are going through and they're going to all these great lengths in an effort to make sure that there wasn't any negligence on the behalf of the business owner in any capacity. Yeah, this is what they do, man. This is their business.
Oof.
So it's a situation where you a lot of these businesses, especially the mom and pop ones, I mean, they're not reopening until they get that insurance check, right? So more than likely, and then the big national brands, they're not coming back in until they can. What is 30%? Because that's effect. I mean, I'm only speaking from Philadelphia, right? Because I don't know, every area is a little bit different. But in Philadelphia, they just opened phase yellow, which effectively means that businesses can open at 30% capacity, right? If you're what's a big retailer? If you're a Sephora,
Target.
right? If you're a Sephora,
yes.
What does 30% do for you? Nothing. It does nothing. You're 30% capacity. That means you're letting a third of the people that would typically come in that store on a daily basis, you're allowing them in. You're literally watching money march by your front door. It almost doesn't pay you to have the employees in it full capacity because there's money. So it's like in Philadelphia, at least, they said you have to operate at yellow for a month, and then you have to be 2 weeks, and then it can be green. I don't even know what's after green. Who knows? But the fact of the matter is to get the full occupancy where you're allowed to run your business at a full level. I mean, they're still like a month and a half, 2 months out of school.
Oh my God! You got what is it? ABC? We're over here in Jersey. We got 1, 2, 3, 4, something like that.
Oh, you guys are numerical.
Yeah.
Phase 1. Yeah. So
phase 1.
They're all doing it a little bit different. That's why I said I don't know about the other areas, but I'm just saying that there's still a lot of time before they open up, and I think that there's right now, a lot of people make their entire understanding.
John, you're coming in and out with the phone call and your voice.
I said a lot of people. Can you hear me now? Is that better?
Yeah.
Okay. So a lot of people, their whole financial understanding of where they think the economy sits at any point in time is whether the stock market's going up or down, right?
Yes.
But there's a lot of other variables that come into play there, right? go back to our podcast from March in the beginning when the market tanked. I said, look, and you can go back and you can find a floor for the next couple of weeks, and it'll probably rally back up to 27,000. Talk about the Dow, 28,000. We're back up here right now. This is all kind of anticipated, right? But for somebody that doesn't understand,
Yes.
it's like, oh man, things are getting better, right? Things are great. Things are getting better. They're improving. The stock market keeps rolling higher, right?
Mhm.
But the reality is, there was such terrible expectations baked in that it's rallying right now on the idea that maybe it's not going to be as bad, right? But we're way still inflated right now. So there's it's inevitable that we're going to get some kind of evening out over the course of washing out over the course of time, right? Which is fine that it's back up. It doesn't change all the other variables that exist, right? Unemployment is still a problem. The reopening is still a problem. Operating at the potential capacity that it should be is still a problem. These are all very real fundamental economic issues that aren't changing, right? Just because the stock market's going up. The stock market, especially the indexes, are a broad swath of large, like Fortune 50 companies, right? Like they're enormous companies. It doesn't represent the mom and pop. It doesn't represent in large cases the smaller, resorts and stuff like that. It doesn't represent a large majority of what our economy is. So you can't use that as your only indicator. You have to use that coupled with a lot of other variables in order to make your own thesis. And I don't think, based upon going back to where we're at today, there's been any indication that anything has gotten better. I look at the airline stocks, right? The airline stocks. I mean, nothing has changed about the airlines, right? Absolutely nothing. There's been absolutely nothing changed. Matter of fact, meaning like they haven't added any plexiglass between the seats. All they ask you to do is wear masks, right? They haven't changed any ventilation because they think that's the cleanest air ever. So, I mean, flying is still just as disgusting as it was 3 months ago. They've made no adjustments whatsoever, monetary or otherwise. Somehow the stock was sitting at around $9 about, I don't know, maybe a week and a half ago. It's up at $25 right now. I think it closed at $20. Today, $20 and change, with nothing changed, right? Absolutely nothing changed. So it's literally about, I don't know, maybe $5 or $6 from where it was before the market completely collapsed and everything changed. Capacity is way down. I explained in last week's call about exactly how far they are off from daily trips, their full capacity, right? I explained that in the previous podcast, how at one point in the middle, they typically run 500,000 people. They're normally traveling 500,000 people a day, and at the armpit of April, it was 10,000 people. And you're talking, we're a month and a half out, and you're telling me if the stock price is the same with a company that's making probably, if they're fortunate this year, maybe 30 to 40% of their previous year. It's going to even itself out. And the point I'm trying to make is, we're still at the doorstep, and I'm glad that things that people, in any area other than the northeast part of the country, aren't miserable, right? But at the same time, this isn't the end of the story. You know what I mean? Like, there's a lot of things was much slower. The employment stuff is going to continue to play an issue in this situation. Turning around and if anybody on this
so it's going to be slow poke, Jay.
What?
It's going to be slow poke.
Slow. But that's why I told everybody from the beginning. I said, expect this to start. It's going to take some time to unwind. It's called an unwinding process for a reason, right? It unwinds. It takes time to unwind. You got to go through these ebbs and flows. And, you're going to see. I'm not saying that, I'm just saying that the stock market should not be the sole indicator of how the overall health of the economy is. The stock market is being propped up right now by the Fed. They're buying every last asset they can get their fingers on in an effort to add liquidity to the market, which is keeping it propped up. That doesn't help the barbershop. That doesn't help the nail salon. That doesn't help, the local restaurant, right?
Yes.
That doesn't help any of that stuff, which is what everybody's main street, even in cities, are run on.
Correct.
Right? So, it's things like that I think there's still a lot of unfolding that's going to happen over the course, now into the end of the year. But I think it's all for the greater good, quite honestly. I think any asset that can go into the real estate market, I think is a gift, right? Where you can get the properties down and you can start to buy them at a little bit of a discount relative to everything else, especially with low interest rates like we have. And I think that will help. But I think that at the same time, it's going to take some time.
Okay.
As long as unemployment stays up like this, I think it's going to continue to be an issue.
Okay, I got Fatboy850 who always manages to ask questions almost by the end of the podcast. He says, Should we unfreeze Lexus, Sage Stream, etc., so that it will be an easier process for you to clean a credit report? Question mark.
I don't think it. I don't think it impacts us in any capacity. I think it doesn't make our life any easier or harder. I think the problem that comes into play is I think sometimes it impacts the actual consumer more than us, and we just don't. That's the thing. The only reason for bringing that up. I mean, for us, if it's a situation where it was disputed in conjunction with other ways of disputing, which ultimately led to the possibility of it leading to a split file, that obviously is something that's going to be following that consumer around forever, and most of them don't even have a clue about what that means, right? Correct. So when they see it, they're not going to know how to approach it, and that's the only thing we want to prevent. I mean, that's all. I mean, look, maybe there's people that do it that way and it's successful. I haven't heard of any success stories about that, right? I really haven't. I mean, we get a lot of lack of success stories doing that, and we get a lot of roll off from that. And now I'm starting to see other things that result as a result of it. So if it works for some people, I think that's spectacular. I haven't seen it, so I can't speak on it. I have seen some of the negative things that seem to appear as a result of it, which we just want to avoid for the client. But if it's already on there and you don't have a split file, it wouldn't matter to me one way or the other if you keep it on or not. It's not going to stop what we're able to do.
Okay. Andrew Johnson says, thanks guys for all the great, all the info, great content for everyday issues. My lease is up in August and was not in position to buy with credit, but want to make the right decisions. That's good.
Yeah. Well, I mean, I'm confident he'll make the right decision when the time comes, right? I mean, if you need a little more time, everything happens for a reason. So if you need a little more time to finish that stuff up that you got, it may just mean that when you come back out and when it's time, when your lease runs out, or if you had to roll over the lease, the time to come out is a perfect time to do it. Which honestly, I really think is going to only, the more time you can give this thing to breathe and even itself out, I think is only going to work in the benefit of people that are looking to buy. I really do. I tell everybody that I'm like a broken record, but I just really feel that way. And, I think for him, it'll probably be the same. I think once everything gets straightened out the way it should, he'll be in a position to buy and it'll be at the right time.
So we have another question that's similar to the one that about the credit utilization and what your credit scores are made of. I have someone who reached out on Facebook who says, I have a quick question. I know somebody that his credit was around 820, then added his daughter to his credit card. Now he is saying that his credit dropped to 750, even though she paid monthly. The credit card limit is 6,000 and she spent 1,500 and paid 300 monthly. Is that true that his lost 70 points because of that?
Well, even in that scenario, 1,500 on $6,000 is like 25%, right?
Correct.
If that was just his only card, so there wouldn't be any situation where 70 points would drop it. Now, if you're using Credit Karma, you may see an exacerbated move just because of all the reasons we've discussed, and you need to go if you need more information on that. We made a whole podcast on it, but under normal circumstance, absolutely not. And you wouldn't even in a situation. Let's just say it's a typical scenario, and you go from 0% usage to 25% usage on a normal file with a normal comparable FICO 8 formula that you're using on like Experian.com or something, you would see the score drop maybe 10, 12 points, maybe 15 points, right, as a result of a 25% increase on utilization, right?
Yes.
With the idea that your full run, your full gamut is around 35 to 40 points for that, that's as a result of the insecure credit ratio. So no, not under any circumstance should drop 70 points for that. And especially if you're paying $300 a month to pay it off, every time you make that payment and the pay down happens, you should be recouping more of those points back. You don't not get that back. If you lost it as a result of the usage, the minute you pay that back, it goes back up, right?
Yes.
So it's not lost points. It's points you can easily recoup and control, like a yo-yo. So I think there's probably maybe a little bit of misinformation that's being conveyed.
Yes, because I told her.
Not from her or he or she to us, but from the person who's the primary to that person. Right?
Correct. Because even as an authorized user, you still have that same limit as the person who owns it.
Exactly.
So you're able to see that. So she can't if it's only one card that she got added to as an authorized user, it's only one card. You got to look at your situation, how much you are using as far as your revolving credit card account. Maybe you're using other credit and you're blaming this credit.
No. Exactly. Exactly. That's absolutely right. So it's one of two things. Either they're using Credit Karma and it was in conjunction with something else, or he had more than one card, more than just 1,000, and a general usage went up. Right.
Correct.
In that case, 0 to maxed out would never represent 70 points on a normal functioning site, right? From 0 to maxed out would represent potentially 40 points. But the reality is this is 70 points, which leads me to believe that it's Credit Karma, which also leads me to believe that they shouldn't be using that site to begin with.
Well, people love that vanity of just seeing that they got a 850 credit score, Jay.
No, people just like Credit Karma because it's free. That's it. That's it. Everybody drives themselves nuts, man. Some people I think like the drama surrounding like the daily fluctuations and the moves.
Oh yeah. Some people that we see,
unexpected ways.
the people that we see, and let me tell you something. People who come to us, well, you don't see it first, Jay, because they call me, but they come to me and they say, "Do you want?" Everybody always wants to talk to me for 10 to 15 minutes. But I'm like, where are you monitoring your credit at? And to get a quote. Now I say, listen, if you want to start credit repair this in a couple of days or this week, we're not going to need your Credit Karma. You're going to need to get Experian.com to be able to see your 3 bureaus. But if you're just pricing us and you just want to say like, oh, I just want to see how much you're going to charge and you're using Credit Karma, we could look at your Credit Karma info to give you a quote as to how much it's going to be. But if you are like serious on starting credit repair, you got to stop using Credit Karma. That's for sure.
Yeah, because I think the one thing that you realize, we talked about this in the one podcast we did about which monitoring sites to use, is that if somebody's only ever used Credit Karma and not any of the other ones, they effectively program themselves to believe that site is infallible, right? It's flawless. So I mean, you literally have to reverse engineer, like we did with that one client which we talked about previously, or the brother of the client who retained us to help her brother, who just. He doesn't use that anymore, which is great, right?
So he stopped using it?
Yeah, he uses Experian now, which is good, right? Because once people see the difference and they compare it, they're like, oh, you're absolutely right. And then they start to recognize and they start going something more traditional and reliable, etc. So, I mean, I just think it's free and it's easy and it's a low-hanging fruit. You can have your score in 30 seconds, right?
Yes.
And literally, and even though you're only getting 2 bureaus, it gives you a point of reference. And the sad day is when they go to do a hard pull and their score's a 650 on Credit Karma, and they do a hard pull and it's a 540, right? And
yes.
They're like, hey, it's so different. Unfortunately, it is what it is. It's a Vantage score. Nobody uses Vantage scores as far as types of credit products, and as a result, you had negative accounts that are getting taxed differently. So that's the difference.
Correct. I have Lamont Houston. You remember Lamont Houston?
Yeah.
Names sound familiar?
Yeah.
Yeah, he listens to the podcast. Lamont Houston from Massachusetts. Yeah, Massachusetts. He was one of the first people that purchased our back in 2016. Wow, this guy back to 2015. He's been watching us. But he's one of the people who purchased our professional do-it-yourself credit repair system. I think he used to be a teacher, and he started doing credit repair full time.
He did. Yeah, he did used to be a teacher, and I talk to him every now and then.
Oh, okay. Yeah. He says he knows that voice. So that's John. Yo, look at this. Since 2014, Jay, this guy's been.
Yeah, well, listen, he's doing his own thing now. He started his own stuff, and it's good, man. He's an example, and he can speak to you on this, but he's an example of somebody that got our system. He's growing his own business. He's doing his own thing, and he's doing good things. So I mean, he's one on the credit repair, like it starts on stuff. He's definitely.
I remember the last time I spoke to him, he told me he had gotten a BMW. And he was getting a great deal, so he had $30,000, and he purchased. He gave the whole $30,000 down for a car. I hope he learned his lesson and not.
He's come a long way since then.
So yeah, so Lamont, shout out to you. 617 area code. I think that's Massachusetts. Yeah. So any more questions here? Look at that. Somebody 818.
818, that's LA.
That's LA. Yeah, that's a guy named Tony. You know, some of these people, Jay, they are can you please stop? Okay. Oh, come on, man. Let me refresh that. Let me see if that stops. That's my Google Voice, guys. Okay, good. So some of you see the YouTube videos, and at the same time, you may be a little bit computer not illiterate but savvy. You may not use your computer that much, and you may not know how to go to Experian or mess with emails, because a lot of you are, you work with your hands and you're painters. You just don't know how to use computers that much. This is one of those customers that I spoke to him before, and he was having, oh, I don't know how to do this, I don't know how to do that. So I was like, well, we're trying to work as much as possible with you, but you have to be comfortable with technology, because we communicate through email. It's going to be the best way to communicate with us, because we get back to your emails faster than usually. Like when somebody text messages me, sometimes I'm doing something, I may not get back to you ASAP, but if you email us, John will get back to you pretty quickly during the weekday. But yeah, but that's about it, Jay. No more questions. You still there?
Yeah.
Okay. All right, cool. So an hour, 50 minutes. Thank you so much for the people who logged on. Again, think about, the stuff that's going on right now with the United States, whether it's political or the protesters and all that is going on. But you also got to think about the finances of what your situation is, and seeing where you want to be at in the next 3 to 4 months, 3 to 6 months, 6 months to a year. And if your situation is not where you want it to be, you got to pay attention to it. You just can't let it sit there. And then when you need it, that's when you want the service. You got to open your eyes to it, take responsibility, and then say, I got to do something about my situation. Anything else you want to say, Jay?
No, not at all. Other than the fact that we're going to keep trying to pump out as much content and education as we can. If we're trying to cover as much of the stuff that we get questions on that are in the moment too, things we see, because we get flare-ups, which include stuff that you can tell goes through credit boards and stuff during that period that we got on, and obviously either knock down or at least provide some legitimacy to as far as topics are concerned, or at least just provide general clarification on. So if there's things that you guys think that you'd like for us to talk about as well, definitely by all means feel free to shoot it out. I mean, we want to touch on as many topics and provide as much clarification as you can see. I mean, it started out just originally talking about credit stuff, but now we kind of dip into other areas and we get into other aspects and facets of the economy and all different areas of things. So, in an effort to try and just spread as much education as we can, if you guys got some ideas, definitely email them over to Gizzy. We'll definitely take them into consideration.
My email, GizzyCredit@GizzyCredit.com. It's in the body of this, of the YouTube. So just go to where it says more info, and you see all our information there. Text message me all the time, or email us, like I said. But anyways, Jay, thank you so much. John is safe in Florida. He's going to deal with the heat. How hotter does it get in the summer in Florida, where you live at?
I mean, I'm in Southeast Florida, in Palm Beach County, so I mean, you can cook steaks in the street in the middle of the summer. I got about a month till that starts happening, but I mean, it's really the humidity, But look, honestly, I will take peace of mind and the heat and humidity as opposed to what it was like up there.
Oh my God.
It is a very unhealthy environment up there right now, and I think I would take.
And what a shock to you! Like coming from chilling in Florida, everything is open. The next thing you know, we're 6 weeks behind. The next thing you know, John says, "Yo, we're 6 weeks behind here," and the next thing you know, riots.
Yeah, and then it went from 6 weeks behind to like 3 months behind. Now they got to rebuild half the city in an effort to even open it back up. So who knows?
And then the icing on the cake is when he gets up early to go walk and see the damage, and he sees people looting with no problem at all, just going.
It was a Sunday stroll, man. I mean, there's a photo that made it around Philly, right?
Yeah.
That it was a girl who went in to Athleta, and this was that following morning. Went into Athleta, which is at the on Walnut, same area right at the bottom of my building, right as it goes down.
Yes.
She walks in there. She's got the audacity to go behind the register, grab an Athleta bag, right? One of the bags, fill up the bag, right, with all whatever was left over, and walks out. She was just doing random shopping. Smirk on her face. Somebody called her. She was coming out, and they just sent the picture all over the place, right, just so everybody could try and eyeball and catch her.
Yeah.
She was, because it was just audacious, right? I mean, it was. She went behind the register and grabbed herself an Athleta bag. Did her own little stroll through the following morning when it was just nothing but just ruins, right? And then comes out with this shit-eating grin on her face, right? Because she knows people are watching. It's crazy. It's crazy. But you know what? Look, I think all that's going to come from this point forward, in my opinion, is positive stuff. So
that is
I'm going to keep telling myself that.
That is very true. Hopefully, John will be back in Philly next year.
Or maybe around Christmas if the city's put back together.
Yeah. It has to. That city is. It's too much history not to go back into, not to let that city go like that. You can't let that.
No, I mean, look. In all reality, it's gonna it's gonna be fine. I just think that the fact of the matter is, I think that a lot of the cities, including Philly, without getting into this too long, because I know we're wrapping it up, it's just they've been going through a renaissance for the last 7 or 8, 9 years, right?
Yes.
Areas that, like Philadelphia, maybe even 10 years, where they've been built up and they were brought to the beauty that they stand right now. I mean, the last thing you want to see is that get reverse engineered, and with a lot of the stuff that's going on, you could see that start to back off for all the reasons we talked about last week. And it's discouraging when you live there, as long as I've lived there, right?
Yes.
So it's going to work itself out, just like everything will normalize. Everything will eventually get back where it needs to be. It's just the question mark at this point is when, and we'll see what happens.
Okay. All right, John. I'll see you on the emails. I'll see you soon. Take care. Bye-bye. That's John, guys. Shout out to John, my cat. I got you locked in this room because you scream so much. You want to go out, or you want to come over here? Come on, man. Oh, yeah, no, Pixie. Pixie is still alive. She's still here. Pixie is from 2005. Pixie's 20 years old, yo. No, 20. She's 15. Jesus Christ. Anyways, that's my baby. Guys, thank you so much for logging on. Thank you so much for YouTube. People that stood on Facebook. My business page, I'm not doing. I did for like 4 or 5 months Facebook on my personal page, just to let everyone know on Facebook that, listen, we have been every Monday we've been serious. So now everything is going to be on the business Facebook page. You have the link on the info section of this video. So if you can like and subscribe, the business page, I would definitely appreciate it. You can reach out to me there as well. Thank you so much, my people on YouTube. And I know many of you like to like the ending of my podcast with some GizzyCredit music. So here it goes.
GizzyCredit. Anything you want, then you can get it. Don't be scammed, cause then you'll regret it. Hollywood legend. No longer gotta look pathetic. GizzyCredit. Anything you want, then you can get it.
Hey.
Don't be scared, cause then you'll regret it.
Follow me on Instagram too. Instagram.
GizzyCredit. Anything you want, then you can get it. Don't be scared.
Just finished our podcast. Thank you so much for the people who logged on. And right here, people on Facebook, thank you so much for asking questions.
GizzyCredit.
See you later. Hopefully you enjoyed it. You were able to log on. Yes, sir. already know.
Hollywood legends.
Just get it fast, get it fast.
GizzyCredit.
See ya later.
GizzyCredit.
Hey,
GizzyCredit.
hey,
GizzyCredit.
hey.